For like thousands of years, gold has been this quiet, constant force, sitting in vaults, backing empires, just there. But in 2025, that all changed. It got loud. So let's dive into exactly how this ancient metal suddenly started making some very, very modern headlines.
And this is the number that just stopped everyone cold. $4,000 an ounce for the very first time. I mean, this wasn't just a new high score. It was a huge psychological barrier being smashed. It was a massive flashing sign that something fundamental was shifting in the global economy.
And get this wasn't some slow creep up the mountain. Nope, gold absolutely surged, jumping more than 26% in a single year. That's a landmark rally that made everybody, investors, central banks, you name it, sit up and pay very close attention.
So that brings us to the big questions, right? Why now? What on earth happened? And what does it all mean for us? In this explainer, we're going to break it all down. We'll look at the forces behind this incredible surge, what the experts think is coming next, and what it all could mean for the future.
Okay, so to really understand 2025, we've got to rewind a bit. We need to look at gold's timeless role in the financial world. I mean, this stuff was important long before the first stock was ever traded.
For millennia, humans have just prized gold. Why? Well, it's durable, it's rare, and pretty much everyone everywhere wanted it. It was money. That eventually led to the gold standard, where your cash was directly backed by physical gold. And even after that system ended, gold's power stuck around. Today, it's seen as the ultimate outside money, an asset the whole world trusts because no single government or bank controls it.
And that brings us to this really key idea, the safe haven asset. Just think of it like financial insurance. It's the place people run to when they start getting nervous about their currency, their government, or the markets in general. And gold? Gold is the original safe haven.
Now, if you look at where gold demand comes from, sure, jewelry is always a big piece of the pie, but that's not what drove the 2025 surge, not at all. The real story was in those other slices, a huge flood of investment money, and, this is critical, relentless buying from the world's central banks.
All right, now let's get to the heart of the story. We're going to dissect the 4 specific forces that came together to create the absolute perfect storm for gold, launching it to that record-breaking high.
So first up, you had nagging inflation and a ton of uncertainty about interest rates. That made an asset like gold, which doesn't pay interest, suddenly look way more appealing. Second, you had geopolitical tensions flaring up and worries about government debt, which sent investors scrambling for that insurance we talked about. Third, the central banks themselves just kept on buying, adding more and more gold to their reserves. And finally, all of that just lit a fire under investor demand, with money pouring into things like gold ETFs.
And listen, this isn't just some theory we cooked up. As this quote from Goldman Sachs points out, this is a classic playbook. When things get stressful around the world, money flows into gold. The 2025 rally was just a textbook example of that happening on a truly massive global scale.
And if you want to understand the sheer scale we're talking about, just look at this number. The World Gold Council reported that in just the second quarter of 2025, total demand hit almost 1,250 tons. That is an incredible amount of physical gold getting pulled off the market. So what does that look like in money terms? $132 billion. That's how much demand there was in just one single quarter. It really shows you this price surge wasn't just smoke and mirrors. It was backed by an unbelievable tidal wave of real cash.
So, after a run like that, the $1 million question, or maybe the $4,000 question, is what's next? Let's pivot from what happened to what could happen by looking at the main scenarios the experts are debating right now. Okay, analysts basically see 3 possible paths from here. There's the bull case. Inflation stays sticky, governments keep spending, and central banks keep buying. That could push the price even higher, maybe towards $5,000. Then you have the base case. Central banks wrestle inflation down, things stabilize, and the price just kind of hangs out where it is. And finally, the bear case. The economy roars back to life, yields rise, and gold gives back some of those big 2025 gains. Which path we go down really depends on everything from policy to psychology.
All right, we've talked about the huge global story, but what does any of this actually mean for you and your own finances? Let's bring it home and talk about how gold actually fits into a personal investment portfolio.
So most investors don't really use gold to try and get rich quick. It's not the primary engine for growth. Instead, you should think of it as a diversifier, a small piece of that portfolio insurance. A typical allocation might be somewhere between 1 and 10%. It's a strategic hedge, and remember, it is not a guaranteed return.
You can get exposure through physical bars and coins, ETFs, or even stocks of mining companies.
At the end of the day, gold's crazy 2025 rally was a powerful reminder of how fast things can change when the world's perception of risk gets a major rewrite. And that really leaves us with the one critical question we're all thinking about. Was this spectacular surge the grand finale, or was it just the beginning of a whole new chapter for gold?